stocks and help you pick the right stock at the right time. Good morning, you're watching All You Need to Know on Bloomberg Quint Live, India's first digital live streaming business news service, and I'm Darshan Mehta. First, the headlines. Asian markets are off to a mixed start owing to divergent cues from different parts of the world. Geopolitical tensions rise in the Middle East after 2 oil tankers were attacked near the Strait of Hormuz. While the US has blamed Iran for the attacks, Iran has denied its involvement. Crude prices spike as a result. Credit rating agencies will now have to aim more disclosures in the quality of debt instruments, the rate after the series of default as per the new SEBI guidelines. And the ICC World Cup match between India and New Zealand has been abandoned without a ball being pulled owing to the weather. Let's begin with the action on Wall Street, where benchmark indices ended with moderate gains. A surprise rise in jobless claims led to rise in bets that the Federal Reserve will cut interest rates at its next policy meet. Renita Young of Bloomberg News brings us all the update.
U.S. stocks closed higher on Thursday, with the S&P 500 snapping a 2-day losing streak to actually reach a 5-week high. How did this happen? This happened as U.S. jobless claims were unexpectedly higher, and that bolstered the case for the Federal Reserve to cut rates. Now, the U.S. still has unsettled tensions within trade relations with China, and U.S. President Donald Trump launched new trade threats with Germany. And what investors and traders are wondering is if this newly dovish Federal Reserve can do a little bit more to offset these trade threats and the trade tensions that are continuing to happen at this moment. Meanwhile, we did see oil make its biggest jump since January after 2 oil tankers were damaged in attacks near the entrance of the Persian Gulf, and treasuries climbed a little bit higher. And also, no surprise there that gold was a little bit higher, since it is seen as a safe haven against geopolitical uncertainty. Meanwhile, in the food industry, we saw Tyson rising after launching its new plant-based protein product line. That sent shares of Beyond Meat down a little bit. And this all happens, by the way, not too long after Nestle said it will launch its own veggie burger in the autumn in the United States. And that's a look at your Thursday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
On to oil prices, which have staged a spike overnight after 2 oil tankers were attacked in the Persian Gulf near the Strait of Hormuz. The U.S. administration has blamed Iran for the attacks and claimed that Iran is working to disrupt the supply of oil. Listen in to what U.S. Secretary of State Mike Pompeo told reporters last night.
The United States government that the Islamic Republic of Iran is responsible for the attacks that occurred in the Gulf of Oman today. This assessment is based on intelligence, the weapons used, the level of expertise needed to execute the operation, recent similar Iranian attacks on shipping, and the fact that no proxy group operating in the area has the resources and proficiency to act with such a high degree of sophistication.
And in response to this, Iran has said that it has categorically rejected U.S.'s unfolded claim with regards to the attack. Derek Wallbank of Bloomberg News brings us the update.
Iran's mission to the UN just in the last couple of minutes came out, said it categorically rejects all of the what it calls, quote, the U.S.'s unfounded claim with regards to these attacks. And that's important here because Iran had been accused by the United States of being behind this. I think some of the evidence that Mike Pompeo outlined, I mean, look, they're talking about some preliminary stuff of videos, pictures, things of that nature. There are U.S. assets on site. The USS Bainbridge is on site. U.S. ships were quick to respond to this because the Fifth Fleet, which is one of the United States' largest military presences, the Fifth Fleet is based in that area. So they were quick to respond. They've been on scene. In terms of public stuff, it gets a little bit harder. One of the logic points that Pompeo was laying out there really was a sort of commission by omission, the idea that Iran is probably responsible because it's right next to them and nobody else operating in that area is even possibly up to the ability of doing this. It was sort of the logic that Pompeo laid out. But I've got to say, it's really tricky here, and having covered this for a while, one of the things that's hardest here is that you don't see all of the evidence that's sort of behind the scenes here. The U.S. isn't quick to necessarily put out some things that may or may not still be classified, so it's very, very likely that as we're trying to react to this and traders are trying to price oil and figure out new risk threats, that we're operating in a little bit of an information asymmetry here.
Derek, there was also some hope before all of this that the US and Iran might get together for talks. Is that looking a little more remote today?
Very much more remote. Yeah, I don't think that you can see it. It's so remote. It's past the curvature of the Earth on the horizon. Both Iran and the U.S. have said at very, very, very high levels, quite frankly, that thanks but no thanks. Iran made a statement out at the very top levels that basically said, we appreciate Japan's Shinzo Abe coming to town to talk about this, but we've got no interest. We can't trust the United States. We don't trust Donald Trump. I'm paraphrasing here. President Trump came back and said basically that time's not right for talks with Iran. So there's a lot of mistrust on both sides. I think for Iran, particularly after the U.S. pulled out of the Iran nuclear deal, there's just at a very top level publicly again, there's just not much interest from either side here in going to formal talks. Now, are there talks going on behind the scenes? Who's to say? Probably, but that's very different than these sort of like top line, let's make a deal kind of talks, where right now both sides are saying that they flat out have no interest.
Let's take a look at the Asian markets and get an update from Sophie Kamaruddin, who is joining us live from the studio in Hong Kong. Good morning, Sophie. What's the scene like? How are the Asian cues indicating trade for most of the Asian markets?
Well, good morning from Hong Kong. This Friday, Asian stocks are looking mixed with geopolitics in view. We have bonds broadly higher, pushing U.S. two-year yields to December 2017 lows, while the yen is gaining ground. And oil has steadied after jumping overnight on the tanker attacks in the Gulf of Oman, which is sending Asian energy stocks higher this morning across the board. But semiconductor players, they are among the laggards on Broadcom's weaker guidance, which could weigh on the bull case from chipmakers for a second-half recovery in demand. And on the IPO front, Alibaba has confidentially filed for a listing here in Hong Kong, but Warburg-backed ESR Cayman has decided to delay its IPO here, citing unfavorable market conditions. And today, Hong Kong shares are set for a third day of losses, while equities in Shanghai are gaining ground, up about 0.1%. And over in Japan, stocks are fluctuating. I want to highlight shipping companies, which are falling as Morgan Stanley cites concerns over trade uncertainty. Back to you.
Thanks so much for that, Sophie. We'll certainly watch out for most of the cues there. Agam Vakil is here to set up with what all is you need to watch out for in today's trade and what happened in the F&O side. Agam, good morning. Yesterday was rather mixed for the markets, but what are we anticipating today?
Well, probably more or less was the same today as well, Darshan, based on the setup. For now, the SGX Nifty is indicating, again, a marginal decline. Again, we can't really go by what the SGX Nifty is indicating, as has been the case over the past 3 or 4 weeks. Let's talk about what happened yesterday. Flat day of trade, but weakness for the broader markets, and what was a mixed day of trade for the banking indices, as you can see on your screen here. And as far as your ADRs are concerned now, we are looking at a decline in something like a Dr. Reddy's, marginal moves coming otherwise. In terms of the other set of ADRs, we are looking at 1.5% gain for Wipro. But in terms of contributors, or rather the FII flows, again, very little happening here. We've seen about 172 odd crores coming on a net basis from FIIs, and DIs are sold into these markets. As far as your contributors go, well, again, a mixture of trade. So while we did see some strength in the financial space, so we also saw some weakness in something like a Reliance Reliance Industries and Infosys. Moving on to futures and options, we're keeping an eye on futures. Again, some unwinding, very little movement here, as was the case for the Nifty banking futures too. So we did see 10% decline in open interest here as well. And moving on to your open interest distribution, again, not much has changed. It's the same 1,000 point range, but we're looking at a 500 point range between 11,500 and 12,000 on the upper end. And in terms of changes in open interest, again, on expected lines, we're seeing writing around the 12,000 and the 11,900 calls. Moving on to your India VIX, that came off even further at around 3.7, and your Nifty put call ratio also at around 1.5, about range bound again. And as far as your stocks are concerned, we have IDBI Bank, Reliance Capital and Reliance Finfra in the F&O band, and we're watching out for PC Jeweler because that's moved out of the band. So I reckon there will be some opportunities that traders will take on this one. As far as your other stocks are concerned, we're watching out for ICICI Prudential, CIT and RBL Bank, along with something like Diwan Housing Finance, of course, which had moved out of the F&O band in the previous day, all looking at substantial short building. And BEML, Yes Bank and BPCL, on the other hand, is looking at some sort of unwinding. Keep an eye on Yes Bank as well, another hit of around 13%, and also the top loser on the index, or rather, on the Nifty yesterday. So we'll be watching out for these counters today, Darshan.
Okay, certainly we'll watch out for most of the counters that react in trade today. The SGX Nifty is indicating a slight negative outlook. But let's see what's making headlines across the globe. Sue Keenan of Bloomberg News brings us the first word headlines.
We start with the U.S. and China. The Trump administration says it is still awaiting a response from China about potential talks at the G20 and is warning of the consequence of a no-show. The president warns or wants to meet Xi Jinping and has threatened to raise tariffs if talks do not happen. Meanwhile, top White House aide Larry Kudlow says a balanced deal is not possible because of the current unbalanced relationship between the U.S. and China. In the UK, former UK Foreign Secretary Boris Johnson has taken a huge lead in the race to become the next Conservative Party leader and therefore Prime Minister. After the first round of voting, he won more than twice as much as the support for the runner-up, Foreign Secretary Jeremy Hunt. 7 candidates advanced into the second round, with 3 eliminated. The next vote takes place on Tuesday. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
On to updates from the market regulator, SEBI. It has come out with new guidelines for credit rating agencies. The new guidelines require disclosures on the cumulative default rates, probability of default benchmarks, and the liquidity indicators. This comes after a series of sudden high-rated debt instruments that defaulted on repayments. Advait Rao Palepu brings us all the details.
The Securities and Exchange Board of India has published a new guideline for enhanced disclosures by credit rating agencies. These new guidelines come after criticism received from investors and promoters regarding sudden or quick downgrades or ratings revisions by the credit rating agencies in the cases of stressed or defaulting corporates. As part of these enhanced disclosures, the credit rating agencies will now have to publish a cumulative default rate on an annual basis. This will be both for long-term and short-term instruments and will be based on their 1-year, 2-year and 3-year default rates for the various debt instruments that they rate. The second new disclosure that will need to be made is a liquidity indicator. Back in November, SEBI had told CRAs to include a liquidity section in their ratings releases. They have taken this a step further by telling the credit rating agencies to publish a liquidity indicator as part of their ratings releases, which would range from poor liquidity, adequate liquidity, strong liquidity, and stretched liquidity. Third new change is a new suffix that the market regulator has introduced, which is titled CE, or credit enhancement. Most CRAs publish an SO, or structured obligation suffix, next to the credit rating when a debt instrument is backed by assets or securities. But to bring in more transparency, the market regulator has introduced this new CE suffix for credit rating agencies to assign to debt instruments when they are backed by different forms of credit enhancements, such as guarantees. The fourth new change is the probability of default rate that credit rating agencies will have to publish from the 31st of December this year onwards. But companies tell us that this is a new criteria that has been introduced globally as well. So therefore, they will take some time to work out the details on how to publish and measure the probability of default rate with the market regulator. The fourth change is that credit rating agencies and the market regulator will have to work on a standard operating procedure on when and how to recognize defaults and when to publish those ratings revisions when a corporate defaults on its debt obligations.
With just over 3 weeks left for the union budget, representatives of the various sectors met Finance Minister Nirmala Sitharaman for pre-budget consultations, with the NBFC sector having sought a dedicated liquidity window. The Roads Ministry also, through the NHAI, has sought additional budgetary support. Let's listen into some of the voices we spoke to post the meeting.
Ministry has asked for about 37,000 crore more from the Finance Ministry.
Okay. And so what's the plan for NHAI now for this fiscal year? Are you planning more bidding to happen? Which TOT auctions are also going to take place? So when is the plan for that, sir?
We have already bid out the third TOT package. It has already come out today. The construction target for the current year is 4,500 kilometers, while the award target is about 6,000 kilometers.
And what suggestions have you given to the Finance Minister for NHAI?
We have suggested reintroduction of the tax-free bonds, and we have also suggested change in features of the 54 EC capital gains bond, which is one is the raising of the ceiling of the current scheme, that is 50 lakhs to 5 crores, and reducing the tenor from 5 years to 3 years.
Our recommendation is that full focus should be given on infrastructure and housing for all, so that cement can play its own role, and we can see better demand to come in future. So like last year also we saw with the good government spending on road, infrastructure, etc. Cement demand has been 12-13% last year, in spite of slowdown in real estate. So this year also we expect that yes, with focus of government, it should come up. The way suggestions came not only from us but from other sectors also, like from renewable energy sector, from telecom sector, etc.
What were those recommendations?
Recommendations were that yes, one, renewable energy should be focused, and like what we said also on particularly in the solar power plant, that if government can facilitate the certain policies in regard to banking or net metering, or can exempt from transmission charges or electricity duty, then it will be faster to move from fossil fuel to renewable energy. That's one. And secondly, cement sector can also work on usage of various type of waste, which is otherwise creating dirt in the country. So we said that let there be a policy of polluter to pay. Whoever pollutes, he should pay for it, so that wastage can be, handled by other one. Third was that on circular economy, that how one can use the waste material of others, like cement sector is doing, of fly ash, of power plants, slag of steel, or various other waste material of pharmaceutical or paint industry. So we said that a cement sector is ready to use that, including usage of plastics. So our point was that we are ready to support the government because it will be supporting ourselves. We are ready to march ahead towards the government's initiative of creating a clean and green India.
Agam Vakil now joins us with the stocks and news. Agam, which are the stocks that will be at the center of action today?
Right, Darshan. I'm going to start off with Group Finance because from what we understand is the HDFC Limited is looking to sell about 4.2% stake in Group Finance. The deal will be worth around 900 crores and it will be sold at a floor price of 290 rupees per share. The deal will be done to reduce stake in Group Finance after the Bandhan Bank deal. Moving on, we also have Work Hard in a positive perhaps, where we understand it's received 0 Form 483 483 observations from the US FDA for its bioequivalence center in Aurangabad, bioanalytical and quality systems for tamsulosin capsules, as well as metoprolol ER tablets were audited. We also have Thyrocare Technologies, which is in the news today, where we understand the board will decide on separating the nuclear healthcare subsidiary. This is after a valuation report obtained from a merchant banker, and the CMD in this case has offered to buy out the company for 195 crore rupees to ensure no loss is being taken by the shareholders. Indiabulls Housing Finance is also in the news, considering the company says that it has made a timely payment of interest of NCDs whose due date falls on June 14. This may not be important otherwise, but considering the current circumstances, it may be perhaps important to note this one. And as far as the ASM framework is concerned, where Eros International and Hindustan National Glass have been shifted to the ASM framework. So we'll be watching out for these stocks, perhaps some negative reactions to come on these as well.
Okay, we'll watch out for all these stocks as markets open at 9:15. As we come closer to the new Modi government's first budget, spends on different sectors will be in focus. One key area to watch will be the government's allocation for public health services, considering India is desperately in the need for better healthcare system. Let's take a look. There's lots to talk over the course of the day, and you'll find all the live market action on BloombergQuint.com. There are also few stories that you should consider reading on our website, BloombergQuint.com, and here they are. Addressing the annual general meeting of TCS, Tata Sons chairman N. Chandrasekaran says there has been some improvement when it comes to group companies working together. But there is more room for more collaboration between the said group companies and the work at arm's length, and there's full transparency, but emphasize on the need to work together more. And in pre-budget meeting with the Finance Minister, Nirmala Sitharaman, representatives from various of India's financial sector and capital markets sought a dedicated liquidity window for non-bank finance companies that can be used as a source of emergency funding, and a panel to review provisions made by banks for stressed assets. Liquidity and solvency issues of non-bank financial companies need be handled separately and on a case-to-case basis, Rakesh Sharma, Managing Director at IDBI Bank, told reporters after the meeting. Okay, with that, it's a wrap on this edition of All You Need to Know. Stay tuned to Bloomberg Quint for more news and updates.